Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, July 15th, 2025. This is Dale Woodson, editor of Woodson Wave Report. Want to get our subscribers caught up with our newsletter subscribers. So without further ado, let's just get right in today's report. Get into it here. It's July 15th, market close. Wanted to show you guys our triggers and targets system. And it's auto trades is the name of it, and we got a never before done agreement with Stryker Securities, the futures broker, to reduce the prices. You can see the old prices there and the new prices here. This is for a limited time, but yeah, it's unprecedented. Okay, so anyway, I'll explain how that works, but there are the systems there, old prices and new prices. Okay, and then I wanted to show you guys this these trades. Okay, I'll just read this. I'm emphasizing a 6-day trading period to illustrate that our system can not only make profits when the market goes up, but also when it goes down. There are some professionals out there who can only make profits when the market goes up. They don't know what to do when it goes down. They either don't participate or they lose. We know it goes down faster than it goes up, so there's many more opportunities there. But we had 6 trading days from June 26th to July 8th, a holiday in there, long holiday weekend. We had 16 wins for over $6,000 profit, 2 losses for not even $8 loss. Okay, so when the market was going up from the 26th to the 1st in green, we were long. And you can see here, 26th of June all the way to the 1st of July, all of our positions were long and we had profits on all. Okay. Then the market changed course, and from July 4th to July 8th, the market went down. And if we can get on July 4th here, you can see all of our positions shown in red were short. We did have one loss on 2 contracts for a total of $7.90. Anyway, that's not typical. Don't expect those kind of returns, but you hit them, it's good. And we just started a new trading system called financials, okay, and that covers the 10-year bonds and the 10-year notes. Okay, so far we've been trading the T-bonds, I'm sorry, the T-notes, and you can see our results there. It's only a few days old. Just made the first trade on July 10th, and we had a short gain on the 14th, and then this was a nice gain today. So that's brand new. Just started that out. As you guys know, I've been listening for a while. I love the bond market. Former bond market timer of the year, and so love doing it. Okay, just starting that system there. Okay, and this tells the details about the auto trade system. The developer is me. Trading system, I use Fibonacci and Elliott Waves. I named it triggers and targets. It's important to have a trading system. It's more important to have a money management system. If you don't have a money management system, you'll run out of money. 80% of all accounts stop trading because they run out of money. Okay, I use the Ryan Jones fixed ratio money management system. It limits our trading losses to 5% and it builds on our gains. Okay, how does it work? You open a futures trading account with Stryker. They're a futures broker. I am not. They auto trade my trades for you in your account, which you open up with them. There's all the contact information and there's a disclaimer. Okay, in case you missed it, we did the Elliott Wave Hub last week. I was on at 6 p.m. Eastern. I think there were 8 or 9 Elliottians, and all good stuff, good offers and everything there. You can click here on the Elliott Wave Hub. There you can see really small the URL for that. You can also see it on our newsletter. Okay. Anyway, if you want to watch it, it's over there. And then we get into the analysis. All right. So today's the 15th. We had Fibonacci turn date on July 13th, which is a Sunday. The futures opened on Sunday night, and the market looks like it topped so far on Tuesday. Our target price was 63.43 3/4, and the actual high today was 63.43. So that's a direct hit in terms of price and time. The time is off either by 1 trading day or 2 calendar days. We'll take that. And the price is within less than a point, we'll take that. Okay, here's an hourly chart of the E-mini futures from the May 23rd low. You can see in red we have a 1 up, 2 down, 3 up, 4 down, and a 5 up. We've got the fifth wave subdividing. There's a couple different ways you can count that. You could move 3 up and have 4 up and not have an overlap diagonal triangle, but we started with that, so we're going to stay with it. The retrace targets of this rise from May 23rd to today, 7/14, the targets are 61.19 even, 60.49 and 3/4, 59.80 and a half, and 58.82. Again, always we ask ourselves when making a chart or a trade, where is it wrong? Okay, this is wrong if it goes up above the today's high, 63.43. All right, and we'll look at a longer term. I think daily maybe. I've got a target up in the 6400s if that's the case. And when it goes down, it should hit one of these targets if it's only correcting this 5-wave advance from May 23rd to today. If it goes below the May 23rd low, then it's correcting something more, which is probably below from April 9. We can get into that a little bit later. Okay, there's the verbiage on our direct hit. Okay, within 1 trading day, 2 calendar days. There's the retrace targets written out there, and here's what it shows. Move below that low, the market is correcting something bigger, probably the April 7th low. A move above today's high means it extending higher. That target is 64.53. I think I may have that on a chart. Okay, there's our positions for the continuous futures contracts. Here's our Fibonacci spirals, and this one will play out for 377 days, so that next turn date will be next year in 2026. We'll update that later on. There's the 7/13 turn date, hit on 7/15. Okay, here's one that shows the next turn date of July 28th, and lo and behold, there's another one with July 28th. So I don't know what's going to happen on July 28th. Might be monumental. We have 2 different time spirals that start from 2 different periods of time, end up on the same day. This one's a 233 day extension, and this one's a 377. So we'll see what happens there. Okay, there's the circuit breakers in case the market goes crazy like it did in 2020, and they have to put the circuit breakers on. Okay, that's all the details for that. I want to show you guys too. We can get back here. If you want to go to our auto trades, go to our website, click on auto trade. The name of the system is triggers and targets. It'll take you to the landing page for Striker Securities. Okay, and without further ado, let's get into some of these charts here. Okay, let me get to the 10-year Treasuries. Okay, this is a daily chart. Okay, we're looking at an A up, a B down, a C could go to there, but it doesn't look like it quite did. This is going from the November 2023 low. It's opposite of bonds. When bonds go up, when yields go up or interest rates go up, bond prices go down, and vice versa. Okay, so if you look at a chart of 10-year Treasuries, you'll see the exact opposite of this. Let me get from a daily. I want to drill down a little bit more to an hourly on this. It's a little bit crowded, but we'll make it work. Okay, and there's that ABC up. It looks like it started 5 waves down here, as you can tell. We're looking at an hourly chart. We got a 1 down and a 2 up, and then it looks like, again, it's hard to get a triangle by me. Then we got a 1 down, a 2 up, 3 down, 4 up with a triangle, and then a 5. If I can get that down, let me drill down to a 10-minute on that. There it is. Might be able to show this a little bit better. There we go. Let's make that even bigger. Let's make that a full page. Let's get all that stuff out. Now we can see this. Okay, well, scrunch that down a little bit. We can squeeze all that in there. There we go. Okay, so this is July 1st. We've got 5 waves down for wave 1. We got a wave 2, and we've got a 1, and that 2's off a little bit. Let me move it up there. 2, 3, and then here's the 4, A, B, C, D, E. That C should be, the label should be lowered, but the price is right. That's a 4th wave triangle, flat bottom, ascending top, ascending triangle. And then we had a wave 5 down to complete wave 3. Okay, So then we should get a 4 up and then a 5 down. That's on the bonds, I'm sorry, that's the Treasury notes, okay? So let me get out of that, and let's go here, and let's see if we can flip that over to, bear with me here while I get my bearings, the actual US 10-year Treasuries. And we're going to have to zoom out on this here. Let's go daily, and let's get that out of the way. We got to adjust this for the daily chart. A lot going on here, but it's just the opposite of what we just saw. Okay, so here we got, let's make that full screen and get the tabs out of there. There we go, this will be better. Okay, here we're looking at a wave 1 up with a circle around it, a wave 2 down, there's 2 of them, there should only be 1, and then we would have a wave 3 target, 3 would equal 1 at 5.367%. Okay, from that wave 2 low, we've got a wave up, 1 up in parentheses, a wave 2 down in parentheses. This is a little tight. Let me open. There we go. 2 down, and then 3 up equals 1 at 5.044%. Okay, and from there we've got a 1 up. Let me move that over. There we go. And a 2 down, and we've got a red 1 up and a red 2 down. This is really crowded, so I'm going to make it like this. There we go. So we're getting a third wave at least 3 degrees of trend, which is very powerful. Like I was saying, rates aren't going down, they're going up. Okay, well, where is it wrong? Well, this 2 is wrong in red if it goes below this 2 in black. This 2 in black is wrong if it goes below this 2 in parentheses, okay, and on and on. That 2 is wrong if it goes below that 2 with a circle. So that's 3 degrees of trend, maybe 4. But that's what we're looking at. And here we've got that retrace. I haven't looked at this in a while. A down, B up, C down. Yeah, that B is broken. That might signal, that will signal that this decline is over at that direct hit. There's direct hits all over the place here. Like I said, I love the bond market, and if we zoomed out, you can see we have a direct hit back here. We have a direct hit over. They're all over the place. Okay, so anyway, that's what we're looking at. 1 up, a 2 down. That 2 is going to be confirmed as complete as soon as this moves above the wave 1 high up here, which looks like 4.627%. So that's what's going on in the US 10-year Treasury bond. Okay, let's get out of that and let's go to the ES. Okay, we're going to look at the see if we want to look at the daily here. Let's look at the daily. Okay, remember I said if it goes above that high today, or the higher target, that's it right there. The 64.53, it's not quite 100 points, it's about 80 points away, okay? So if the other chart you saw was from the May 23rd low, 1, 2, 3, 4, 5, okay? I didn't put that 5 in there, but it should be. I'll just do it now. Let's add it. We'll clone that, move it up, and change it. And it'd be good if you did the right one, right? Okay, there we go. Okay, so that's that red 5. All right, from here, 1 up, 2 down in red, 3 up, 4 down in red, and 5. There's no overlap in there, like I showed you on the other one. All right, a lot of gaps open to fill, but if it goes past this, below this May 23rd low, then it's correcting this move up. And that would be an ideal 382 retrace right there, fourth wave of a lesser degree, which is 57.65 3/4. So again, where is it wrong? If it goes above 63.35.50, then it's going to hit this target. That's our next target. Okay, where is it right? It starts correcting and starts hitting our downside targets here in red. That's the correction from the 32 low on April 7th. If it doesn't correct this, then it's going to correct this. I mean, if it corrects more than the May move, then it's going to correct the April move. Okay, let's get out of there and let's go. I think that'll be the same thing we showed you on the newsletter. 1, 2, 3 in red, 4 with the overlap, ending diagonal, and 5 up there, and that was the black 5, if you will. target, direct hit, price, and time. There's those retrace targets there, okay? And I think we can just go ahead and drill down to the 10-minute. Yeah, there we go. There's the high so far. We've got a wave one down. Let me just put that in there for you guys. We have a one down. Yep. And we'll clone that and make it a 2. There's the 2. Okay, then 3 equals 1. Let's get a clone on that. Down here. And that is 62.59 1/4, and then the 1618 is 62.27 1/4. So that's what we're looking at here. Okay, a 1 down, 2 up, and that looks like a 1, 2, 3, 4, 5, 6, 7, 8. Looks like it's got one more way to go. That looks like a 4. So 62.59 looks like it's in sight. Okay, so that's what we're looking at there. I think we've covered everything. Let me take you guys back to our report that we're going out today, published today. Scroll on up, look at that picture right there. That's the operative wave count on an hourly basis, and we can go daily, we can go 10 minutes. I like to use a 1 minute for entries, 10 minutes for direction, and hourly for confirmation that 10 minutes is correct on the charts, on the chart basis. Okay, that's it for now. Until next time, take care, everyone.